Welcome out to the Trading Justice Podcast. This is Mark Justice, joined by my brother Matt from TackleTrading.com. TackleTrading.com is a fantastic educational platform. We are a part of it. My brother Matt founded it. It is a fantastic place to learn about trading, to have a community to support you. I could go on and on and on, but we want to get this podcast done in an hour, Matt. And I could talk for an hour on how fantastic tackle trading is. Become a pro member, become part of this community. We'll have your back the entire way. Matt, how are you doing on this fine early March day?
I am doing absolutely fantastic. I'm excited to be here to record another episode of the podcast and break down all this market activity. It's been a crazy volatile last couple of weeks, and I'm here to have some fun on the podcast.
And now, what does March? What is symbolic with March? If you're a sports fan, right? March Madness, right? March Madness, which is kind of a cultural event, goes beyond just your average sports fan, where you can get some storylines and excitement and this and that. I remember going to Little Caesars a few years ago when the 16 beat the 1. And I made the mistake of going to Little Caesars to get a pizza. And then I saw the line and I was like, oh, yeah, the line was like 8 miles long to get the free pizza.
We have a lot of international people at Tackle Trading, and we have a good friend of mine who helps us to tackle a tremendous amount. I was talking to him about March Madness in general and what it means to Americans. And I tried to explain it to him 14 different ways, and he just did not get it. He's like, you guys are crazy. And I'm like, oh, you don't know the least of it, but we do like our March Madness. There's no doubt about that.
Yeah, no, it's fun. It's a cultural event. But so we're going to have a little stock madness in our podcast today. We're going to talk about a little bracket challenge we're doing with stock. We're going to do that here in about 15, 20 minutes or so. We're going to talk about a little bit of the stock madness going in the market as well. But I'm going to save that. I know if we start talking about that bracket, Matt, we won't talk about anything else.
Very quickly, we're playing Stock Madness throughout March, and I've basically created a bracket of 64 assets in the financial markets, and we're going to basically play this in conjunction. We're going to do updates every week on the podcast, and we're going to do polls there on our Tackle Trading Twitter account. So definitely subscribe to our X account, because we're gonna have a lot of fun with this, and hopefully you guys enjoyed as we do. And obviously we like to have fun when we do these types of things, but also I like the analytical approach when we do these. I like kind of getting into the nitty-gritty debate of, well, let's think about Tesla versus Yum Brands.
I love that aspect of it,
about Apple versus eBay, or
because
versus Chewy.
And why I really like this exercise at this time is because I think I'm bearish. Hello, I'm Mark. When you have turned bearish,
you've done that since 22, bro. Like, hello.
Yeah, when I'm bullish, I don't say it. I don't like I'm a bull but when I turn bearish, I'm like, hello, my name's Mark. I'm a bear. Right. Yeah. Like it's like you have to put the badge on at the party to let know your affiliation. Mm-hmm. But what I love about the exercise is that while I have a bearish heart and maybe a bearish argument, there are things that I'm looking to pick up as well. Right. And so there's that duality of trying to navigate short-term bearishness or intermediate bearish. We'll see how it plays out technically. We'll talk about that in a second. But like, who do I like? Right. Because we know the Bulls have a tendency of winning over time, right? And so finding opportunities, right? And so I really love this Stock Madness bracket that you came up with. I've already enjoyed going through it. I questioned some of your seedings, but we'll
get into that.
We'll get into that in a second.
If we don't stop, that's all we're going to talk about for the next hour.
So, all right, so
let's get into it.
Listen, I don't want to. Last week we spent a lot of time on the developing bearish case, and I just want to highlight a few points. I don't want to spend a lot of time talk about how I want to get your feedback on them, but I think the bears have a case here. I think it's a pretty reasonably simple case in the sense that it's not complex to understand. You got some slowing growth in the economy. Mm-hmm. Atlanta now GDP came out and kind of dropped the mic on the economic thing recently, on Friday, where they dropped that the first quarter GDP is projected at negative 1.5%. Now, Atlanta Now GDP, the Atlanta Fed, who puts out this forecast, look at that chart,
Yeah.
right? Like they have a really good track record. Like when people were calling for recession, Matt Justice, my
It
brother,
was me and the Atlanta Now
and
GDP.
Atlanta Now GDP were like, no, we don't see it. Right?
That was the two. Yeah, I remember it well. They were very accurate all through last year too.
Very like sometimes like scarily pinpoint accurate, like on GDP numbers.
Listen, I question a lot that comes out of the Fed. I don't question the Atlanta Now GDP forecast.
Yeah, and then and it comes off the back of a suddenly like just coming to the market narrative of slowing growth, right? Mm-hmm. And so now you have this like fast narrative of like, oh, economy's slowing now, or could we be heading into a recession earlier than right now? Whether we are or not, that conversation is in the market, right? And I think that is the the conversation, not the reality. Right?
Yeah, the conversation. But market participants have these economic conversations well in front of anybody else in the world, like months in front of anybody else in the world. And so, for example, as a market participant, every year since 2005, I believe we have debated recessions like every single year since 2005. And so it's constantly in the conversation, but sometimes it's only a certain pocket of the marketplace. Yeah. Right now, it's starting to creep into the mainstream, and
that's a good way to phrase it.
That's where it gets a little bit concerning in terms of additional volatility in the market. I want to be very clear on something, though. I in general believe we get into this recessionary conversation way too fast, way too early, and it's oftentimes people laying their political beliefs out through an economic philosophy. And it's constantly wrong in the past. And so I kind of feel like that's playing out a little bit right now. And I think we should try to discount that to a certain extent, because again, we're going to see it in the data. We're obviously concerned about the consumer right now. And inflation, those kind of two real big topics right now, right? And so we're going to track those areas of the market, and we're going to make sure that we're laser focused on that conversation. But let's not make that conversation more than it is simply because the market was a little bit crabby in the last couple of weeks. In general, the economy, the way I personally see the economy is, in general, it is not providing a tailwind to the market right now. That doesn't mean the opposite, though. And that's what I want to be very clear on. When it comes to momentum from a technical perspective, I talk about this all the time. When you see slowing momentum on a chart, regardless of if that's bullish or bearish slowing momentum, that doesn't mean the opposite end is getting the traction. That just means you're slowing momentum. It doesn't mean increasing momentum for the opposite side. And economically here, with the market being a little bit sensitive, yes, we are concerned about the consumer. We are concerned about services. We are concerned about retail. And the tariff news is creating a little bit of uncertainty in the market as well. But let's stop short of just embracing, and I'm not saying you and me, and I'm not saying let's not talk about the economic factors. I'm just saying let's stop short of declaring the end of the world economically simply because the market's crabby in an environment where we're getting a little bit of negative economic data.
But and it's one of these things, and one of the things I've learned over doing this for a long time now is that when the bears have a case, right? And I believe they do. I believe they have the superior case to the bulls. That's my personal belief.
The bulls don't have a case right now,
and it makes it an easy, a matchup when
I was in law school, bro. They used to teach us all the time: understand your opponent's argument better than you understand your own. Oh, and as a bull, I'm like, I don't have an argument right now, so that's the only thing I know is the bear argument. I'm with you on that.
And so when that happens, you then turn to technicals. Right. Yeah. And that is the thing, is that like I made mistakes as an early trader. I made mistakes as a middle trader. I've even made mistakes as a later trader with too much experience to know better, to be like, This is a really good bearish argument. Let me act upon it. No, you wait for the technicals and you wait for the technicals and you wait for the technicals, right? You look for snapback rallies, you look for things. And right now, and this is what, and I called you up last night, Tackle Trading Newsletter. You write the technical part of it. And I said, fantastic job. You nailed it. That was fantastic work. Give us a high level view of what you shared in the newsletter.
Well, I think there's a couple important points in general about the market right now. Number one, don't force action in the market. Don't try to force your opinion and your willpower on the market. If the market's not participating as a tailwind for your activity, be a little bit patient. Patience is a position, and certainly this is an environment that does, I don't want to say scream patience, but it does scream pattern development. It does scream consistency from we need consistency. And so there's some flaws in the market right now. And so when I looked at the market, and honestly, Mark, you called me up, you talked about last night's phone call. The night before on Thursday, you called me up and you're like, what are you going to write about tomorrow? Because like we're dealing with a lot of technical volatility right now. And I said, I don't know. I don't know. I want to see how the market kind of behaves tomorrow. I want to see how the market responds off that support level tomorrow. And that was Thursday night coming into Friday. And so I kind of felt like and I'll just kind of pull up the newsletter. If you're a pro member, definitely check it out. If you're not a pro member, like this thing is worth the price of admission.
It is
trading in and of itself, let alone the 10 different webinars we do with our pro members every single week, let alone the customer service, let alone the award-winning educational platforms. Eliminate a coaching program that we've had for 12 years and we've never had one complaint on it. Remove all of that. The newsletter itself is worth the price of admission, in my opinion. 3 different videos covering the entire marketplace. It will keep you more informed on the market than if you watched CNBC, read Seeking Alpha, and got a little bit of zero hedge all throughout the entire week. This will prepare you for the market better. And so I thought long and hard about how to have this conversation from a technical perspective. And I really kind of thought it came down to really kind of 3 things right now in the marketplace that need to get clarified. These are things that we need to see clarification on in the marketplace. And the first thing I talked about was just the macro headwinds right now. The macro side of the conversation is a headwind for the market right now.
It's messy.
It's not easy. Every time the market has tried to get up and go over the course of the last week or so, 2 weeks or so, it's been met with some resistance and has had a hard time showing additional momentum from a bullish perspective. And we talked about last week how if you test resistance too much, Mark, and you can't fill it, traders are going to lose confidence in that. And we saw that play out this week because the first point, those macro headwinds and the tariff policy uncertainty right now, I don't think the market is crabby because of tariffs in and of themselves. I think the market is crabby because we don't know what the tariff situation is going to look like in a month from now, let alone 3 days from now. And so there's some uncertainty in the market. And whether you agree with tariffs or don't, that's not part of this conversation. The problem isn't tariffs, it's the uncertainty around the tariffs. And whenever there's uncertainty in anything in the market, whether it's micro, macro, whether it's sector analysis or fundamental or technical, it creates volatility.
And it's not just uncertainty from a market perspective, from a company perspective in making decisions, right?
Because that's what I'm talking about. You can see it in guidance reports, Mark, that
it's like, all right, if we get tariffs, great. If we don't, great. We just need to know how to plan, right?
Well, take Walmart last week, right? What did we see with Walmart last week? We saw a pretty good report, raw numbers, right? The top and bottom line numbers. We saw a pretty good report, but we saw a slight concern on guidance. And that was enough to send Walmart down fairly aggressively. By the way, I'm really liking the development after that on Walmart. Number 2, you looked at Nvidia this past week on earnings, right? The major catalyst of Nvidia this week. Mark, they came out with beats and increase in guidance, and they gapped up. Okay, they gapped up on the news, but that Thursday candle didn't finish up. In fact, it got smoked So why did it sell off? Did it sell off because Jensen Huang was concerned about the landscape, or they were missing? Or Mark, despite the guidance, despite the raw numbers, despite everything about the earnings report, Nvidia started selling off Thursday with the market after the Chinese tariff news, not the earnings news. It was the Chinese tariff news when Nvidia started selling off. And so you saw that uncertainty play out in the macro headwinds and the policy uncertainty. We saw it play out a little bit with Walmart last week. We saw it play out a little bit with Nvidia this week. That's what I mean, is these companies trying to figure out pricing power in the future because they don't necessarily know. I'm not even talking about the political, I'm talking about the math behind it.
It just the what do we do from a logistics perspective?
And 2 weeks ago, what did I tell you here on this podcast? I said EPS projections are going to start going down, and they're going to go down more than the market expects. And what have we seen? We've seen 3.5% decreases in EPS expectations, which is twice as much as what the normal market expects.
They've been a pretty big clip, actually.
It's not a small deal. It's not a small deal. That can get cleared up pretty quickly, though, right? It's a macro headwind right now, but that can get cleared up. And so that was point number one. Point number two, because of point number one, led to a violation of the 20 weekly. And why that violation of the 20 weekly is so important, Mark, is because the structure of the long-term trends in the market. The biggest problem with the market in the last 3-4 weeks has been the choppy nature of the daily price action. It's been very difficult from a choppy perspective on that daily price action. It's been a better day trader environment than a swing trader environment, for example. It's been a better day trader environment than a position trader environment. It's been a great cash flow environment. It's been a great day trading environment. It has not been a great everything else environment in the marketplace. No. And what one of the reasons that happens is because when you give up the structure of the longer term charts, that's what's really one of the reasons and the causations of what is creating the additional volatility here today. And so you have that violation of that 20 weekly this week. You saw that increase in volatility as we did. And yes, you got to give the bulls some credit on Friday, but come on, overextended algorithm move, Mark. I called this Thursday morning.
Yeah, like in fact,
hours before Friday's candle, I literally said in the Traders Lounge on Thursday we were going to see that exact same thing. It
doesn't tell us anything.
That Friday candle doesn't tell us anything, because I kind of felt that was baked in, but it was good to see. Don't get me wrong. I'm not going to complain.
It was good to see. I was able to reduce some bullish exposure at the market bell on Friday. I was very happy for it.
There. My general point is, when you're looking at the marketplace and you have those macro headwinds and you see that violation of the 20 weekly, and because you now have, before, Mark, you could anchor against the structure and the consistency of the weekly chart. You can't do that now because the weekly chart is now a neutral chart, not a bullish chart. Before, it was a bullish continuation pattern against the backdrop of a consistent bullish trend. I'm talking on the weekly chart.
Yeah.
Now you don't have that. You don't have the consistency of a cup and handle formation with the consistency of a very consistent trend on the longer term charts that you're just waiting on a breakout for. And so it did dirty up the joint a little bit. But I am not ready to declare the bulls dead here. I think we're going through some volatility.
I kind of am.
I know you are. I am not. I know the macro headwinds are a concern right now, but I do believe, despite the volatility this week, that the macro headwinds can get cleared up. And if the macro headwinds get cleared up, then the negativity you point to on the Atlanta Now GDP, that gets improved, correct?
Yeah, of course, right? Okay. Of course. If the headwinds here, there's a domino effect. One good thing happens, and then another, and then all of a sudden.
I'm sorry, if we don't have the macro conversation over the last month, but we have a pure earnings conversation, I think we're having a different market conversation, even with the concern on guidance. Because the concern on guidance is part of that macro conversation. That gets alleviated.
Well, part of that macro conversation will be this coming Tuesday, March 4th, where the tariff deadline is on Canada and Mexico. And I do not like you got to get your politics out of this one, right? Tariffs are not good for the market in the short term. However, it plays out long term, right? Tariffs are not good for the market in the short term. And if those tariffs go into effect, it just creates another layer. One of the snarky little comments I've been making lately is bulls don't have to climb a wall of worry. There's just a wall in front of them, right? Like there's just a wall. There's no wall of worry. There's a wall. There feels like there is a cap to the upside.
It feels like there's a sold call. It does.
Yeah.
It feels like the market has a sold call. I'm not sure it doesn't have a sold put there either. Like we could be strange.
And yes, I am more open to that conversation than I am,
than just the sold put one and the market put and all that jazz. Yeah, I'm with you on that. I think at the end of the day, you and I can both agree on one thing, that the market volatility is screaming uncertainty here.
Yes.
Okay.
It is.
And we need, and the market is clearly wanting a theme, correct?
It needs a rallying cry, doesn't have one.
That theme cannot occur until some alleviation of the macro side.
It just that simple.
Dominating the conversation in the market,
sucking the oxygen out of the room, right? And even if you get like, could you get a rally on Monday? And this is the attitude I've had.
Oh, I think
could you get a rally on it
right back up to 610 in 3 days? Like,
yeah, but my highest conviction is sell the rip. Right? I am in the mood to reduce exposure because my bearish heart, I got a lot of
buying
bullish
support.
exposure.
I think you're selling resistance until otherwise known.
I just think you do, right? I say I'm a bull at the 200. I'm a bear as you go higher.
Yeah, like if the market's sitting at a support level, you're looking at your bullish trades and you're saying, okay, we can get a 2-3 day tailwind here. If the market's sitting at resistance, you did it last week. You called me up. Market is breaking or trying to break out of 610 a week and a half ago. Mark calls me up and goes, nope, I'm fading this. I'm
fading this.
And I said, you're fading a potential breakout that we've been waiting on for 3 weeks. That's what I said to him. And Mark's like, yeah, because I find this is the cheapest bearish risk environment, is because if I'm right, I have a lot of return. And if I'm wrong, you have limited risk because I'll just stop out immediately. Mark, I disagreed with your call. You were right. I was wrong. That was a fantastic philosophy. And all I'm saying is now you're not at resistance now. Now you're at support. Let's see how that plays out.
Yeah, and this is the tricky thing. Like if this turns into deeper bearish conditions, the tricky thing to navigate this, because I was telling you before the podcast, I have long-term holdings. I have long-term cash flow positions, right? If all I was focused on them, or if I was a buy and hold investor with 100% exposure, I'd be nervous right now.
I wouldn't be nervous. I'd just be locking down covered calls and golf. Like that's it.
Yeah, but like that part isn't having a fun time. The cash flow.
Before you move on, do you agree with that though? On the longer term side of the equation, I'm not sure this is a moment to get nervous. I think it's just a moment to write some covered calls deep out of the money. What like?
I think
or is it write covered calls, take some cash flow, buy some put options? Like, where is your head at?
I don't think the big bear starts here. No,
neither do I.
No. Because I think 560, 570 range,
have a big bear moment, but I don't believe.
Yes, I think the big bear is down the road, but I don't think this is it. And just because I know if you go down to 560, 570, which I think it feels like if the bear
big bear moment, like
that's not even a big bear moment. No, that's just a continuation of the correction that we're having, right? And so this is a tactical, situation.
Could we be going? Could we be going? We both agree that this isn't big bear moment. Agreed?
Yeah, I don't.
Big bear is like subprime, pandemic.
You have to see a continual downgrading of earnings.
It has to be earnings
revisions.
It has to
have a big bear market. I mean, this is something we've talked about, and I think it's very important to understand. Modern market dynamics are not event big bear moments. You have big events, banking crisis. They're not big bear
pockets, but you don't get big time frames.
If you see a continual downgrading of earnings revisions or yields aren't an issue today, right? That's another thing that can cause a big bear.
Yields in the last 2
weeks. But those are the two things for me that really are like big bear.
Isn't that amazing though that we haven't even talked yields in this bearish move in the last week and a half? Like,
yeah, because the economy's been taking.
No, I get it, but we went from very concerned about yields to now very concerned about.
Go show that 11 now GDP.
Swing trade. It's like I get it. We're day trading the GDP report. This is ridiculous.
All right, let's move on to the next subject. But yeah, paying attention to these technical levels and navigating. And there's
okay. Very quickly though, I want to get you on record. Both of us agree that no big bear right now.
Not this first quarter, not this first half of year. I don't think it's possible. I don't think you have the requisite
correction.
Yeah,
I think is the 5 to 10% pullback in the marketplace from the top to the drop.
Yes, I think that 560 to 570. I will be surprised if we don't go down there.
Okay. Then can I just take one moment to highlight the level?
I think I think the chances of filling the weekly pot, basically from a moving average,
because that's kind of where it is here.
I think you have moving average 20 to 50 potential of fill here.
Yeah.
That's a 5% clip from here, right?
Okay. What you're saying is something like this, right? The move we had in July and August of last year.
Basically, yes.
Something like this. Now, those took into account the structure of the 20-period moving average and whatnot, but that's what I mean by that structure of the longer-term trends kind of given up here.
Mm-hmm.
Mark, the first level you got, if the number one level in the SPY that you got to look at is the 580 level.
580.
580 is a very important support zone. 575 is kind of the lower end of that specific support zone is 580 to 575. The second one, if you breach that, when you look at the daily chart, you got the 200 right around 570. Okay, so you got one at 580, you got one at 570, and then when you go out to the weekly chart, you look at the 50 weekly at 562. I fully believe that we could ultimately see this conclude at the 50 weekly. I do. Okay,
you are going to need more than is currently available, right?
Okay.
To break that level. Yes.
Yes. At the end of the day, I think those are the levels we need to track. But, Mark, there are scenarios where we're still talking cup and handle if we see
there are. I will grant you that.
And so we are like literally middle of the range right now. You have a daily range on the chart between 580 and 610. That's the daily range on the chart is 580 to 610. You're at 594. You're smack dab in the middle of that range. I don't think, and I say this quite a bit when we're debating the directional nature of the market, I don't think it pays to have a strong opinion until we see better technical development here. At the end of the day, regardless of the macro, regardless of policy, regardless of all that conversation, the most important part of this conversation is technical development. And we just don't have it yet, which means patience is still in play here.
Yeah. And, it can be a fun environment. I kind of like this environment from a cash flow perspective.
I like it from a day trader's perspective.
Day trader, come to tackle trading.
I do not like it from a swing trader's perspective.
The swing trader's perspective is terrible. Buy and holder, it's like,
you got a lot of go or don't scenarios as a swing trader. You got a lot of cheap risk, but the probability of those working out are low right now. So you do have cheap risk, high return, low probability setups. And those are really, really popular for aggressive veteran traders. I wouldn't say those are very popular for the newer traders of the bunch.
I'm tackle trading though. We got lots of labs, we got lots of lounge, we got lots of products. We'll share our knowledge. We are not shy of sharing. All right, I want to fire through a couple gold and Bitcoin specifically. Those are only the two commodities that interest me right now. Gold, a little bit of a pullback here, right? Caught up in volatility, and this is what happened this week, right? Is that the S&P did its thing. Volatility spread to basically everywhere. You have. That's just what has happened, right? And you get a little bit of a pullback, looking for a consolidation pattern, Matt. This is a classic example of pullback starts. Wait for the pullback conclusion. It is that simple. But I am very interested. I have been a good, patient trader for the last 5 weeks on gold. Been like, all right, we're stretched.
Yeah,
Let me
and it
be
wasn't
patient.
just in the consolidation. It was like right even before we started consolidating. It was pretty stretched even
Like it was
before.
like I've been very patient, holding off, very interested in the conclusion of this. Going to be patient, going to play by the book, wait for consolidation. Extremely interested in adding to gold. Been a good. I've been good. This is why you're patient. You're patient, and then you get the pullback. You feel like a genius.
Yeah, I think anybody that's been looking at gold and certainly, you know, it's tough to invest at the top end of a parabolic trend. It just always is. You're going to want to wait for price alleviation there, and that's what we're seeing here on GLD. That's what we're seeing on gold. I'll tell you right now, if there's one thing that the last 48 hours well, it didn't teach me a thing, but what it did reinforce is gold ownership.
Yeah,
Gold
I
ownership
want
is
gold.
absolutely needed in
We're gonna have to, and I'm keeping us on track, so we can't go on our gold rant right here.
But just let me finish my point on gold. In this pullback, I think you just treat it like a bullish retracement where you're tracking the pullback of the bullish retracement. And the 260 zone to me kind of stands out a little bit on the bullish retracement side of the equation. Number one, that 260 zone is right where the 9 weekly is, and that's also a 38% pullback against the previous move up. Certainly could pull back even further, like no doubt about that. But that's kind of that first level that really stands out to me on GLD is that 260 level. Ultimately, we're clearing 3,000 by, in my opinion, first half of the year.
Then Bitcoin got caught up in the volatility and then some last week. A little bit of a recovery over the weekend. There was news of, nice hammer like candle action. A little bit of a recovery over the weekend when I've seen little, active trading going on that. Uh, Another thing that I am extremely interested in, have been very, very patient, have started to add, will continue to add as you go lower here. I
Talk
don't sit.
about this one for yourself a little bit because I really did like the conversation you had in the lounge this week about building a position in an asset class you believe in.
And it comes down to like,
I'm going to need to see reversal and development and all of that here. What about you? Because you have a little bit of a different philosophy.
This is the irony of the Warren Buffett school of thought, which the irony is that I'm
Applied
using the example on Bitcoin, right?
Yeah.
Like,
I did catch the irony, but
yes,
it's true though. It's a true statement. It's true.
But it's true. Like Buffett doesn't care when he believes. When he believes, when he has true conviction, right? He adds on the way down, right? We've seen
cost averages, yeah.
Like he's either in or he's out, and he's either in or out at a certain percentage. Not all things are created equal, right? He doesn't view Apple as one of his secondary holdings, right? But on the way down, add. On the way up, take profit when it gets to a certain level, right? He doesn't try to scalp trades, right? After bigger moves. And that's how, like, when there are so few things I actually believe in that I'm willing to do that. Yeah. Right? There's many stocks. Unfortunately, their fundamental levels are not levels I'm comfortable doing that. Like I could tell you 75, 100 stocks that I would love to own at the right price point, right?
Oh, yeah, absolutely, 100%.
Like be like at the right price point, believe in the company, believe in the management, believe
but you're not
in
willing to invest in Palantir at 1,000 PE ratio.
Palantir is a fantastic example of that, right? Is a fantastic example. Believe in the company.
And I would absolutely. I love Palantir as much as the next guy, probably more than the next guy. Palantir is not, this is not the moment to think about investing in Palantir. This is the moment to track pattern development from a trader's perspective, not from.
Yeah, it's a great trading stock, not a great investment. Let's go plant the flag.
And that's where it's at in its long-term trend. Like, yeah. You don't want to be fighting this trader's battle as an investor.
Come on, you ran from 30 to 130. That's not reflecting reality.
Yeah,
right?
Like 100%. 100%.
Yeah. So, but with Bitcoin, right? Like and it comes down to what am I willing? And I think this is the conversation you have and the planning you have. How much am I willing to own of an asset?
Mhm.
And then how much do I have of that asset? And then if I only have a little and I'm willing to own a lot, then as it has dramatic price movement, which it has, then I'm willing to add some more, right?
Yeah.
Not to my full allocation, right? But I'm willing to nibble. I'm willing to nibble.
Basically,
Right? So that
you want to have X amount of your portfolio allocated in alternative assets. Bitcoin is one of those. You have a small position right now, and you're willing to take advantage of the drop in price to start building a larger position.
it's not complicated.
It's a very good strategy and obviously well played out, taking advantage of it. We'll have to wait and see what Bitcoin does. I will say this. There's a lot of structured support between 75 and 80,000 on
and then as you get pattern development, then I add a little more, right? And that's kind of the mentality.
So you kind of
on that.
start on the way down, taking advantage of the drop, and then you basically start adding throughout different stages of the development. And if it just V shapes like it did in the
and then as you move up, the profit taking, not all profit, but the profit taking journey begins.
And then it maxes out and you start alleviating. Yeah, it's like okay.
Yeah.
Right.
So all right, but let's go to Stock Madness and go look at some of those stocks that and Matt, we're doing this little contest, this little fun thing. I am so excited about it. One, I love games. Two, I love stock.
Mm-hmm.
Three, I love binary option. I really do. I love bet yes, no. I love those type of bets, right? Like, and so I love a bracket, right? This thing has everything I enjoy.
I do too. I like it too. I'm gonna have fun playing it.
And so, and the added thing, and the one thing I like about this, on top of all of the natural things I'm like, is it gives me a chance to think about company, right? Mm-hmm. And so what you have done here is you have set up 4 brackets, 64 companies. You've segmented them into what?
Assets like gold, silver.
Or assets, areas of the market or individual things. And then you put them in their own bracket. For example, all AI stocks are competing against one another. It would not be fair for natural gas to compete against Nvidia in round 1, right? It's got to compete. It might
Based
not
on what people think of Nvidia right now, natural gas might win.
It might win.
Listen, there's going to be some upsets here.
So talk about the brackets real quick, and then I got to complain about.
So Stock Madness, we're just playing a game of Stock Madness in the month of March. It's going to be way fun. Number one, we're going to update the rounds in the Trading Justice podcast each week through the month of March. And every week, we're going to be voting on our Tackle Trading Twitter account or X account on polls for these contests here. So that's basically how we're going to play it out. So, for example, this coming week, we're going to put out 32 polls on our Tackle Trading Twitter account throughout from tomorrow, Sunday to Thursday. We'll have 32 polls spread out throughout the day. They're going to be running for 48 hours each poll. And basically what the thought process here is, you just basically look at, say, the 116 in the AI Titans bracket, for example. You got Nvidia versus Snowflake. Who
would you vote for?
Which one would you rather invest in for the next 2, 3, 4, 5 years? This ain't a trading competition. This is an investor one. Just which one would you invest in for the next 2, 3, 4 years? That's it. That's the entire logic behind it. And so when you're looking at the brackets,
Matt, and I love this because the mental exercise, it's not for me, is Nvidia better than Snowflake, or is natural gas better than silver, or
Nvidia is a better company than Snowflake.
Yes, we know that. That's
nothing. You would rather invest in Nvidia than Snowflake.
And this is where I love the mental exercise.
I personally would rather invest in Snowflake very second than Nvidia.
Yeah.
Now, I'm just saying this very second because Snowflake.
Let's do a couple of these. Let's
say again.
Let's do a couple of these, and
let's go through it first. Let's go through it first. Okay. Try and put the cart before the horse a little bit.
Oh, I want to get to the fun stuff.
Yeah, I know. So, I want to explain it a little bit. Okay, so we have 64 asset classes. I have 4 brackets, and I wanted to have like-minded companies compete with like-minded companies. So the 4 brackets are as follows. You have the AI Titans. These are all names off the AI Gold Rush watch list, basically. Bracket number 2, underneath that, you have what's called the Dividend Kings. These are all companies that pay high dividends. Long-term investors love their dividend. They love their cash flow. These companies do it better than anybody. When you're looking at on the top right of the bracket, you have your retail giants. So you have the giants out there, Walmart versus Dollar General, Nike versus GameStop, Starbucks versus TJ Maxx, Apple versus eBay. Apple didn't make the AI Titans because they got to figure out some of the technological development side of the equation.
They actually got to create something.
That's the direct way of what I said. And then on the bottom side of the bracket, you have what's called the hedge hunters, right? These are hedges to the market. Why do people invest in gold? To hedge currency, to hedge chaos. Same thing. So we're hedging something here. Obviously, a lot of commodities, global markets here, gold versus lithium, for example, silver versus uranium. Tips, if you don't know what tips are, they're treasuries that protect against inflation. Would you rather do that, or would you rather take platinum right now? For example, Corteva, would you rather invest in an ag chemical company, or would you rather invest in oil right now? And the thing I like about it, I know a lot of people on Twitter are just going to click on whichever name they like the most, or whatever the case might be. But for the tackle trading community, give this some thought. Take a look at their technicals. Take a look at their fundamentals.
It is a fantastic exercise.
The reason I'm doing this is not just for us to have some fun. It's for us to go through the thought exercise as
this is a sneaky good educational teaching exercise.
I agree.
Right? This is the type of thing where a teacher, when you're a kid in class and the teacher wants you to learn, but you don't want to learn, right? And the teacher comes up with something fun to get you to learn something, even if you didn't want to. Right now, traders in our tackle trade, they want to learn, right? So it's not a great analogy, but it's the same principle.
That's what I said. For the general audience, click, but for the educator in me, like, give this some thought process. So first of all, what's your favorite matchup out of the Titans, the AI Titans bracket this week?
I think, and it's looking ahead, because my favorite matchup in round 1 is Meta versus AMD, just because, and it's less exciting, but I really love the Amazon Taiwan round 2 matchup.
That's good. 6.
I like the thought exercise, right? And one of the things I'm doing is I'm trying not to do events. I'm trying to just do round 1, right? This is going to be a multi-week game. Something that you don't have to, you spend a few minutes on a day as we get polls up, and I don't have to break down. And so it's bite size. But when I look at like that, it's more of I know who I don't have a lot of debates in round 1, but the round 2 ones are more interesting for me. What about you?
I look forward to a hypothetical Nvidia Palantir chess match in my head next week if Nvidia and Palantir move on. I think in round 1 on the AI Titans, the one that interests me the most is most likely I would like to see how bad Palantir beats ASML in the 8-9 matchup. That's my most interesting question going into round.
I'm voting for ASML.
Listen, that's fine. That's fine. You're going to need more than that. Palantir's locked. We'll see.
I know, but I think it's
listen. I get it. Palantir's at the top with
it's just too
ASML, and all those other infrastructure stocks in AI are at the low point. If you actually took a look at the fundamentals and the technicals, ASML has a very compelling argument against Palantir. It does. If Palantir gets,
I don't think it has a compelling argument. I think it has
a dominating
no-brainer. Yes.
I'm interested to see how the Delta Dogs do with their mascot Data Dog. I am interested in that one. What about? Is there any ones? Any mistakes here on how I did the?
I would have put Micron on this list.
That's because you're
but yes, but Micron, like Micron not being on this
the
list
number
as
one
its
memory
role,
company for
the
AI.
number one memory company for AI, I thought was a memory mistake. So
It wasn't a memory mistake.
yeah,
This
like
is the
you need
second
one of
time
their
you
memory chips
criticized
to
me on
get you.
this. Listen, I get it. I get why you would say that, but I the only one here that I think could have a compelling argument there is, well, I think you could argue Snowflake. I think you could argue any of the 8 lowest seeds here and make an argument for Palantir, but somebody's got to get axed.
Someone's got to get access. A lot of good companies.
All right. What about dividend fireworks bracket here?
Like the interesting thing about the dividends is, how do you feel about energy, right? Like, this is where the thought process, when I was looking at these first round matchups,
Energy
I'm like, all right,
transfer is going to get some love.
I'm like, do I like, because if you put this in a multi-year perspective, like, would I just set and forget an investment for the next few years, Warren Buffett style? If it's like, okay, I got to think about energy, I got to think about the trends on that, I got to think about just
Not just energy though, because there's drillers here, yeah, but there's non-drillers here too.
and then I got to think of like, what's the role? Because that for me was like the first thing. It's like, am I in on energy? If not, because if I'm not in an energy the next couple of years, well, then that's going to make some easy matchups, to focus on some of the other things I want. And then I'm like, well, how do I feel about dividend companies in general, right? And then you go down, the individual names. Do I like?
You want to have fun with this? You're taking like Coca-Cola, Pepsi. You're not excited about that matchup?
Like, yeah, it's Coca-Cola.
You're taking this way too deep on
that. Well, no, but like it's easy. Like okay, I'll just fire through. I think for me, Exxon, yes, Coca-Cola, Altria Group over Energy Transfer. Arthur
Altria Group's
Daniels
going to beat by ET. I'm telling you, that's the 12 that's beating the 5 this year.
I get it. Archer Daniels over Chevron, because I know ExxonMobil is likely to win that if they make it that far. For me, Bristol Myers, I don't know why Prologis is not on this list over Realty Income. That's my criticism. If I'm going to put a REIT, I'm putting personally Prologis because it's boring there.
PDDs.
BlackRock over McDonald's because screw McDonald's, and AT&T. What?
I like the dividend bracket. I look at the dividend bracket. I love the 8-9 matchup. Coca-Cola versus Pepsi. I had to do that. It's
my least favorite of the bracket.
Oh yeah, because it's not sexy. It's dividend kings. Like these guys are the most boring value companies out there.
It's like,
you know what's been doing really good in the last week and a half, 2 weeks? Boring dividend companies.
No, it's not the dividends. It's like the companies you selected. I'm like, I probably can't go wrong on a lot of them in one versus another. That's why what I mean is the least interesting.
I'm with you on that. I'm
like, if I go Altria or Energy Transfer, oh my goodness, like I doubt I'm down 85% on that.
And you're right. And for the layman out there, they're probably like, who cares about Altria and Energy Transfer? And yet they're two of the more consistent dividend payers.
You want a little boring in your portfolio.
You do. We got the retail giants here: Walmart, Dollar General, Target, Best Buy, Nike, GameStop, Tesla, Yum Brands. That's Taco Bell, Starbucks, TJ.
These are some fun matches. I thought these were the most
bracket.
It's the funnest bracket. I thought by far this was the most enjoyable, fun, right? Because I look at Lulu versus Disney. And like, it's like, screw the mouse, give me yoga pants, right?
You're gonna wear some yoga pants, okay? I like that.
On that, the Yum Tesla matchup is really interesting because if Tesla was at the top of the chart, 6 weeks ago, this would have been easy for me.
But they're not. They're down 40% off the highs.
And which makes it more compelling for me, but doesn't make it less compelling for others who just look at price action. Yeah. Why the hell you put GameStop on this list? I don't know. You stuck up.
A social test, we will say.
That
was done out of my own curiosity more than anything. because I don't believe you can fundamentally make an argument that GameStop is an investment company over any stock on the retail giants. But I wanted to see as a social experiment a little bit. So that was just more for me. I did put it as and by the way, I will not be surprised when GameStop beats Nike.
And there were a couple of, this was one of the lists. I'm like, okay, because like I'm willing to go Dollar General over Walmart, but I have to do some research first. I'm like, I got to go look
Not
at, because
in the world would I do that.
Bottom top of chart, bro.
Walmart, Dollar General for a reason, bro.
Yeah, but I'm just saying, is their case? Like, I'm not saying that that's where I lead, but I'm like, these are the exercises, right? These are the exercises to go through. But I thought this was a super fun matchup.
My favorite matchup here is Costco versus Chewy.
The bottom four.
I think Chewy is the 15 seed that beats Costco. See, that's I'm interested in that. What low seed beats one of the big generals out here? I'm calling Chewy beats Costco this week.
Yeah, it's more like people love their pet.
They do.
Now, the bracket where I have the most exposure in my portfolio.
I need to hear which is yours. Like, give me
Lulu Disney. Oh, I said that bottom four. I thought you heard me. The Lulu Disney, that bottom four is the most interesting little area of the chart as far as just
And on the last bracket is the Hedge Hunters.
Yeah, this is where I have most of my portfolio.
The number one seed in the entire bracket, in the entire competition, the leader in the horse is the one seed in the Hedge Hunter bracket, and that is Gold. They are the number one seed in the Stock Madness bracket. If I had to rank them from 1 to 64, Gold is the number one seed of the number one seeds. What's your thoughts on the Hedge Hunter bracket here?
Well, this is the one where I had to put the least time into because, like I said, my portfolio, this represents a good bulk of my portfolio already. So I've already done the mental exercise, right? I haven't thought about Salesforce for would I own it, in a while, right? I haven't, but this area, so this was more of just move them along in the bracket for me. I was like, okay, this one wins, this one, and like all along the way. Because this is where I spend all my
Where
time.
Would you think I made a mistake on the
your rating as 13 is stupid?
Which one?
Your rating is 13. Should be much higher. Nuclear Renaissance, major theme, right? Like,
beat in round one.
But it's a bad seed. It's a bad seed.
They didn't have this the strength of schedule challenges that silver and palladium and platinum had. I'm sorry. Plus 13's God's number. It's a lucky number.
Well, uranium's beating silver for me in round one. So now if I had to cash flow
from a number, you got
this is who I would vote. Gold wins, copper wins, gold beat copper. Miners win.
IYR, by the way, it's the real estate.
Yeah, I would have go found wheat or iron ore or something gold miners win, uranium wins, gold miners win, gold wins that bracket. Platinum wins, oil does not win. I don't want to vote for either one of these, but it does not win. I would not want to own oil for 2 years. Natural gas does not win. Ethereum wins.
Not without a lot of covered calls.
And then it comes down to Bitcoin versus gold. And I'll take the safety of gold, but it's going to be a tough decision. I might vote for Bitcoin on any given day.
That's true. So your funnest bracket, you think, is the retail giants.
Fun to think about, right?
Yeah,
I think it's just fun to think about.
I'm excited to play it, honestly, and I hope everybody else kind of joins in and has some fun with it and treat it like a little bit.
It really, I said it like 3 times now, though, is a great exercise. Like, yeah, it's going to be super fun.
So basically, every day this first week, we're going to have 32 polls this first week. In the second week, we'll have 16 polls. In the next week, we'll have 8 as we track it throughout the week. But it's going to be a lot of fun. We'll update it every single week on the podcast as well. So if you are not following our Tackle Trading Twitter account, it's just on X, it's just Tackle Trading. We like to post a lot of good stuff there anyways, and you're going to have a lot of fun there anyways.
Let's fire through a few stocks in the news from this week. Nvidia obviously was the number one story. It was the biggest earnings report. You talked a little bit about the price action, right? The numbers, when I called you up about Nvidia after they released, you're like, the numbers are solid here, right? The numbers are solid. They're not like, oh my goodness, let's like blow them off the doors, but they were solid. Tell us about Nvidia.
Well, I said I think the market reaction is muted, and I think it's right, is what I said. I think the sell-off that we saw on Thursday was really market driven, not specifically Nvidia driven with the tariff news. In general, I've said this for 3 consecutive quarters on Nvidia. If any other company reports what Nvidia does, they're just treated differently. They're just treated differently. Nvidia came out with a 6% beat against EPS, which is a good beat, but it's not what Nvidia typically does do. Nvidia came out with a $2 billion beat on the revenue side of the equation. Once again, really good. Any company would take it. That's another walk in the park for Nvidia. Nvidia's guidance was raised. And so Nvidia actually pulled off the hat trick. They beat on EPS, they beat on revenue, they increased forward-looking guidance. But there were some flaws in the report, and those flaws kind of coincide with some concern around Nvidia, and that's the slowing revenue growth rate over time argument, where you have revenue up 76% year over year, but a year ago revenue was up 220% year over year. And the simple reality is Nvidia, the crown is heavy. It's just a really, 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 really big stock. They've had a tremendous amount of growth in their past. And ultimately, you look at Nvidia over the last 3 quarters, really good reports, hasn't done a thing on the technical side of it. A lot of overhead here, a lot of overhead on Nvidia. And the 2 concerns on Nvidia right now are the slowing growth rate over time, just simply contracting. We're slowing down over time. And as we slow down over time, the technicals are slowing down over time as well. That's number 1. And then number 2, profit margin was a little bit of a miss here. Profit margin is the number 1 story for Nvidia. They were expecting right around 71.5%, 72% profit margin, came in slightly underneath 71. And so there was a little bit of profit margin scare there as well. If you're listening to this conversation on Nvidia's raw numbers, beats, increasing guidance, profit margin, people complaining at 70.5% profit margin, for crying out loud. It's just absolutely ridiculous that the bar that Nvidia gets judged on. But that's also the truthful situation that we're dealing with on Nvidia right now. Yeah. And it's been that way for the last 3 months. So whether the market has it right or wrong doesn't matter. This is where the market has been for the last 3 quarters, not 3 months, 3 quarters on Nvidia. And so I felt like they had a really good report, but I also didn't feel like they gave that ultimate, demand argument that, like, listen, if you don't buy Nvidia today, you're going to miss out. I don't feel like I'm missing out on anything if I don't buy Nvidia today. In fact, I feel like there's a lot of overhead.
And I think that is symbolic of the market right now, is that a lot of assets, you don't feel like there's not that fear of missing out. Like, I
feel like if I don't track Walmart on a King's Bed analysis post earnings, I might miss out. I feel like if I don't track HIMS at the 200-day moving average, I might miss out on that pattern development. I don't think I'm going to miss out on anything on the directional side of Nvidia, because even if it does have a big green candle tomorrow, that doesn't clean up anything. Nvidia needs time more than anything to clean up here. And that's because of the additional volatility on Thursday. Right. But just a good report. Got caught up in some market headwinds on Thursday morning, I would say.
Stock stories 2 and 3 are about AI infrastructure spend. Apple dropping $500 billion, Meta $200 billion on infrastructure projects. On any given week, these would be the 1 and 2 stories. Lets you know that the commitment, right? These are big numbers. These are substantial numbers. The projects, Apple, 20,000 jobs. The Meta, These are facilities, these are jobs, these is infrastructure on AI. These are long-standing commitments. Huge stories coming out of Apple and Meta this week.
Yeah, big ups to Apple here. I think Meta's an ongoing conversation. Like I'm not surprised that Meta's doing what Meta's doing. They've been very, very consistent on that CapEx spending side of the equation. On the flip side of the CapEx side, we are seeing Microsoft start to show a little bit of hesitation on that. We are starting to see other companies show a little bit of hesitation. Meta, no hesitation whatsoever.
I had three of those stories. I was like, I'm going to be bearish the rest of the podcast. I'm going to just highlight the two bullish ones. I left the Microsoft story off.
Two things on the Apple story. Number one, I don't think this is getting the love it needs to get. I think Apple bringing back manufacturing to the United States is a very big deal. I think it is a very big win for the Trump administration. I think it's one of the clear things that he has done very, very well so far is in the tariff conversation, because a lot of times when we have the tariff conversation, it kind of matches political conversations in the United States. Either you're for or against. That's not how it works. The market does not see tariffs itself as positive or negative. It's how tariffs are utilized. It's a tool in how it's utilized. And one of the ways it is utilized in this environment is to target bringing back manufacturing. That's one of the best utilizations of tariffs, is when you are targeting a specific industry and wanting to bring that industry back to develop that from a domestic perspective. And so we are seeing, whereas the consumer's concerned right now and services data has been mixed lately, manufacturing data has been pretty decent lately in comparison to the last 2, 3, 4 years. One of that is we are targeting tariffs from a manufacturing perspective. Where the market hates tariffs is the open-ended uncertainty of broad-based tariffs. And that's where it gets a little bit cumbersome for the market. But on Apple here, I just feel like that $500 billion investment signaling they're willing to reduce their exposure to China. Mark, you know I'm a China hawk. I'm not shy about that. And so I see this as a very, very good decision out of Apple. I see this as a win for the Trump administration specifically. But at the end of the day, I also do know that this will most likely elevate cost for Apple. I don't see that as a negative in the long term. I do see it as a slight negative in the short term. And so you have cost to bring back development home. You have cost in building facilities and building out your supply chain here in the United States. All of these is going to take work. It's good work. It's good work done well. So it's just there's going to be some challenges there. You know what I mean? But I think it's a very positive story. I think if the pandemic taught us, the number one lesson that I learned economically coming out of the pandemic was we cannot rely on the supply chain as much as we did before the pandemic. We have to be self-sufficient and use the global world economic engine to elevate growth, but we have to be self-sufficient. We cannot be going through a Cold War with China over the next 10, 20, 30, 40, 50 years and have our development in China. That is very, very difficult to do. And so I think it's a very good decision out of Apple. Love their development coming back home. We should develop things in the United States. We have superior technology. We have superior development from an infrastructure perspective. We should develop in the United States. We should be the gold standard of manufacturing development throughout the entire world in the United States. And the outsourcing for cheaper labor environments is a thing of the past. I celebrate Apple for making this decision. Now fix your R&D and actually build some technology.
Yeah, that's not going to happen. So let's they'll buy somebody though.
Yeah. Now Meta, again, another day that ends in Y for Meta. They're beyond rich right now with cash reserves, and they're utilizing them fairly.
And that's the thing about they're nation states. These mega cap companies, they're nation states. The amount of available cash they have is
you might as well say XYZ nation out of the world is investing 200 billion in infrastructure.
I mean, they can do, but
It is the
big stories.
competitive advantage we have in the United States versus everybody else.
Stories 4 and 5 were your best and worst. Assuming you listed your best and worst on the little earnings things at the top, HPQ and URBN. One nasty reaction to the downside. Urban really stands out. We'll talk about that in a second. As a cyclical charts look terrible, but Urban looks nice. Like that was
HPQ had the inverted hat trick. They missed on everything, lowered guidance, just a pretty bad report. But Mark, it's not just HPQ. I mean, we saw it out of Dell last week with the gap down. Dell's wasn't as bad in my estimation as HPQ. You saw it a little bit with SMCI pulling back even more aggressively. And so out of the three, I mean, Dell really kind of stands out of bad behavior, I would say. HPQ is the worst by far. Urban, maybe my bias of the Tackle 25. Urban's been a stalwart on the Tackle 25 for years. They're going to continue to be one. It's one of my favorite retail companies from a cover call perspective and a cash flow in general perspective. And I just felt like they had a pretty decent earnings report. Came out with beats on EPS, beats on revenue. They didn't provide guidance, but in a crabby week, the beats, and it was a good beat on EPS. It wasn't just a slight beat. So good beat on EPS, good beat on the revenue side of the equation. Urban Outfitters has been a clear winner in an environment that has been a little bit choppy.
I mean, and it always stands out to me when a performer in that sector, when their chart looks much different. You go to XLY, you go to discretionary sector, it's a hot mess. You go to urban, yeah. It looks.
But that discretionary is taking on its cue from Tesla and Amazon, though.
Yes, but I like the performance. I like the chart. We'll see how it plays out. You got time a couple questions to wrap up a podcast with.
Yeah, let's finish up with Coach's Corner.
All right, Coach's Corner, where we take questions. You can email team at Tackle Trading. Come to the lounge, come to our Discord. We will answer any questions. We spend a lot of time in our traders' lounge answering questions. Here's a question, Matt, that I got this week that got into some version of it before. A trader who's been paper trading, been afraid to dive into the big pool. They say, how long should I paper trade? I feel like I'm spending too much time waiting for an excuse.
If you had to ask a question, the answer should already be there. Do a share, rip the band-aid off, do a contract. You don't have to go full position.
Do something.
Just do a share. Rip the band-aid off. Do one share, put a tight stop loss. One share. Like, pick your company. I don't care. Just do one share, put a tight stop loss, rip the band-aid off. If you've had to ask the question of, I've been virtual trading, Mark, I can tell you right now, it's not somebody struggling with orders. It's not somebody don't get me wrong. They probably need some more education, but it's not somebody struggling with the application side of the equation. It's the emotional side of the equation.
It is the pulling the trigger side of the equation. You and I have seen it. Yeah.
Rip the Band-Aid off. Do one share. You don't have to be right, but you have to move. Tom Snosnop. He obviously the author of the Great Thinkorswim platform. He doesn't believe in virtual trading, like at all. He's like, you got to learn with skin in the game. I need to feel that fire. I don't necessarily believe in that. I do believe in practicing. I do believe, I'm not Allen Iverson. I do believe in practice, right? I believe that some of the greatest three-point shooters in NBA history, Mark, practiced 1 billion shots, right? I do believe in practice, but if you're emotional about it, just do one share. You don't have to go big position. Trading's done over a very long time. Feel that thunder by putting on that live trade. Just one share.
I've been trading for a long time. There was a new strategy I wanted to employ. I did just start doing it.
Yeah.
It was a bearish shorting strategy. It's on natural gas because I'm like, all right,
you're fun.
Exactly. I'm like, if I can,
let me test out a new bearish system on natural gas.
Exactly. And it was like, let's challenge ourselves. It's like, all right, because if you can do this, everything else you're going to do is going to be a lot slower.
Listen, if Mark can test out a bearish system on the Widowmaker, you can do one.
You can go buy a contract or something.
Again, I
go
say this all the time. Traders trade. Traders trade. That doesn't mean they're trading full position all the time. And it's honestly rare to trade full position all the time. That's rare. And so, no, just get out there and do a share. I get it. And if you're struggling, hit me up in Discord. I'll walk you through it. Come over to a trader's lounge. I promise you, I will do it right there in a trader's lounge. I will prep it for you in a trader's lounge. Come to the trader's lounge, but do one share, for crying out loud. Who even cares if you make money or lose money? That's not what that one trade's about. It's about you ripping off the Band-Aid and doing it.
Next question is, this question looks like it's right up my alley. When would you sell a naked put to cost average down? And what time frame do you like to do that? Now, as someone who utilizes naked puts to cash flow, as a general rule, unless you have done it a billion times and proved it to yourself, you want to use technical patterns like you would for a lot of different bullish trades, right? You get a technical pattern that has a bullish thing, right? And so the question was premised from a cost average down, which means you're stuck some shares and you're looking to add some new and maybe doing it through the naked puts, right? Well, as a general rule, you're going to want to wait for a bullish pattern, right? Now, do I sometimes wait for extreme volatility? Yes, but I've done it a million times, right? When you get to that level, you're probably not asking the question. For now, wait for a technical pattern that is a bullish pattern that you would do a bullish trade on.
Okay,
right?
let's say GDX. Would GDX fit that bill of I want to add more gold miners, and so I want to take advantage of this downward pressure?
Great example, and the answer would be no, unless you have the experience to do it. Like, because does it have a pattern right
now? No, I'm saying if you do know how to do a naked put, if you do know, like I'm not talking like if we're talking.
I sold one on Friday.
Yeah, that's what I want to ask. So
I sold one on. I actually did sell one on Friday.
Was
I
that just because it came to a support zone 39 that you felt comfortable with?
Yeah, well, you had clipped 10% in a very short period of time.
Yeah.
When you clip 10%, not only are you getting a better price on something you believe in long term,
you're willing to sell deeper,
but you're also getting higher volatility, which means I'm getting better credit on the naked put.
Yeah.
Right. And so like once you get to that point, you'll look at those circumstances. It's like I clip 10% in almost a week. I get a better price. And I can sell one even lower for higher volatility. Those are usually good naked put.
Let's just face it, Mark. If you're trying to sell naked put at the top end of a trend, you're selling above support.
You don't do that.
Whereas if you wait till it pulls back, you're selling underneath support.
It's just that simple.
It's a very important thing to do. Now, I will say this on GDX. As a directional trader, I would never just buy it because I love the 39 support level. That's that first in the door cash flow strategy, right? They're first in the door. But it's at these same levels that you feel comfortable selling a naked put that I'm like, all right, let's get a little development here, right? Take advantage of that pullback. GDX certainly, I'd love to see it.
Yeah, great example. That's a good example to pull that up. Last question, then we'll wrap up our pod. And I like this one, and I had a few to choose from, and I chose this because I really like this in the context of March Madness. The person asked, I have 10 stocks I want to cut down, and I want to cut it down to 8. From an investing perspective, maybe they're feeling, I don't know the reasons they did a state, but they wanted to cut down, right? They said, I got 10, I want to cut down to 8. What process would you use to do the narrowing process?
Oh, that is a fantastic question. First and foremost, I would look at sectors, like-minded companies. If you have two.
Like that's example, good. I didn't even think about that.
If you have 10 stocks, but 4 of them are semiconductor stocks, you need to cut 2 semiconductor stocks, and you already just made your decision. So look at the diversity.
Oh, that I didn't even think about that. That is so smart, though. It's just like if I'm trying to first, how much you got too much of something. Yeah, that's an easy one to balance it out.
And then you look at the percentage allocation on each stock. So for example, if you have, because you've been investing in Palantir for the last 6 months, you have an oversized position on Palantir. You would automatically look to alleviate some of that. But I would look at sectors. I'd look at it from a diversification perspective, and then I would break it down from a fundamental perspective, and I would look at valuation primarily. I would look at sector diversification first, because if you got 10 stocks you like, you got 10 stocks you like. I'm going to look at sector diversification first. I'm going to look at fundamental valuation second.
Yeah, that's a good thing. And another thing that, when you're talking there that came to me is that, if you have a lot of one, trim there, that makes a lot of sense. But like, depending on how many shares you own, maybe instead of cutting one altogether, a little trim across the board, unless something stands out as an easy cut. Like, right?
Well, yeah, and depending on the account size, like if you have 10 stocks and you have 4 in one area, and you have 20 shares of one company and 30 shares of another company and 80 shares of another company, maybe it's better just to have 100 shares of one company so you can do cover calls.
All right, Matt, enjoy the podcast as always. Send us out, bro.
Yeah, I have as well. Get excited for some March Madness with Tackle Trading this month as we play a little game called Stock Madness there, Chucky, and we are going to have a ton of fun with Stock Madness. We're going to be doing weekly updates in the Trading Justice podcast. We're going to be executing polls every single day on our Tackle Trading X account, so definitely go over there. Make sure you're following us on Tackle Trading's X account. And we're going to put 4 polls out on Sunday, 8 on Monday, 8 on Tuesday, 8 on Wednesday, and 4 on Thursday. That is the 32 matchups for round 1 this week. And once again, my recommendation is I'm going to have a lot of fun doing this. I'm just going to have a lot of fun doing this. But I'm also going to break down Nvidia and Snowflake, and I'm going to think about, from a new investor perspective, if I was fresh off the boat and I was picking a company to invest in right now today, not 3 years ago, would I choose Nvidia or Snowflake today based on the technicals, based on the fundamentals? I'm going to take this thought exercise serious. And so I'm going to have a lot of fun with it, and I hope everybody else does as well. And if you're looking for a trading community to call home, we put the education and application at Tackle Trading, and you can go join that #1 financial education company in America, Tackle Trading, as scored by Trustpilot. Guys, when you join Tackle Trading, we will do everything we can to help you find your success. Sign up for a free trial of the Tackle Trading Pro membership. Check out that newsletter, the Traders Report, the Traders Lounge we do every single day. The market's open with our community. Check out the Coaches Show on Thursday or Tuesday. Check out the Cash Flow Club on Thursday, our mastermind groups throughout the week. Ladies and gentlemen, the Tackle Trading Pro membership, it is a beautiful thing. You can get a free trial of that today. Have some fun with us in Stock Madness this month.
Yeah, have some fun with this. It's going to be fun.
Have some fun with this. Have some fun with this. I hope everybody has a wonderful, wonderful rest of your week.
Have a great week, everyone.